All right, look at that, guys. S&P 500 all-time high after the FOMC meeting, and we have all the indexes exploding right now. The Russell's up 1.7%, the Nasdaq's up over 1%, the Dow's up 1%, and we have the S&P up 0.8%. Again, hitting a fresh all-time high. You guys can see SPY hit $520.36, taking out the highs from a week ago where we hit roughly 518, 518.50. So we're going to break down the FOMC meeting. We're going to go over some key points from that and how the stock market is doing right now. And we'll break down some stocks later in the video. So hit the like button. Feel free to subscribe. And don't forget to get up to 15 stocks for Moo, each up to $2,000. Just use that link down below or go to stocksurfest.com/Moo or check out the QR code right here. And with that being said, guys, let's dive into it. So again, we are absolutely breaking out across the board right now on the S&P, the Dow, the Nasdaq, the Russell, and we have the VIX down about 5%. And get this, the metals are moving as well. We have gold up 1.4%, and we have silver up over 2.5%. Silver's now really starting to break out. You guys can see on this 4-hour chart, we are now taking out the highs from July and August, September, where we hit about 25.30 an ounce, and we're now heading towards the highs from early December, right, being about 26.30. So if silver is able to get out of there, man, it could be moving even further. So we are seeing an explosion across some major indexes, the metals, right? What's oil doing? Let me see what oil's doing very quickly here, guys. Probably down a bit. Yeah, 2%, 1.73 to be exact, in the red right now. But yeah, a ton of green out there across the board. So with that being said, guys, let me pull up this. I love the way CNBC breaks it down. They have these articles where it's like a minute by minute kind of, it goes over what Powell's saying, all that, which makes it great for the visual, for the video here. So you guys can see Federal Reserve holds rates steady once more in March, sticks with call for 3 rate cuts. You guys can see central bank policymakers have decided to hold interest rates at their current target range of 5.25% to 5.5%. The move was widely expected by the market. So it's not like this is anything out of left field or this or that, right? But we'll see what else was said here. The Fed also stuck with its earlier forecast for 3 rate cuts before the year is out based on its dot plot, which let me know in the comments. I'm actually super curious. Do you guys think we're actually going to get 3 rate cuts this year, as we're already almost in April? So we're getting there, guys. We're getting there. I mean, look, we're almost a quarter of the way through the year, right? So what do you guys think? Seriously, do you think we're going to get 3 rate cuts in the next 8-9 months here? I'm really curious. But yeah, that's the, I guess the headline here, where again, they're holding the target range steady, and they're still on the 3 cuts for the year. And coming up here a little bit more, guys, obviously stocks are rising on the announcement. We covered that, and we can see here, details in Fed decision are dovish. Strategist says the Fed keeping its expectation of 3 interest rate cuts in 2024 can be taken as a positive sign. And really, guys, the markets were looking to see if the Fed was going to reaffirm this, right? That's why we're getting that rally, because the Fed reaffirmed this, 3 rate cuts. Okay, boom, stocks are taking off. They were a bit uneasy before, but now, boom, they're taking off, right? And we can see here the details are quite dovish, according to macro strategist at Carson Group. I can't even pronounce this guy's name, so forget about it, guys. But the details are quite dovish because they're leaving rate cuts on the table, even while projecting slightly higher inflation and more economic growth, which is quite interesting, right? Quite interesting. You'd think that maybe consider holding rates a bit steady for a little longer. But yeah, they're leaving 3 cuts on the table right now, which I've always been a proponent of the Fed not prematurely cutting rates. You guys probably know that. I've mentioned that time and time again here on the channel. And yeah, it worries me a bit if they really If they really start cranking these cuts, guys, it's going to worry me, right? So Federal Reserve Board Chairman Jerome Powell reiterated on Wednesday, there we go, guys, that policymakers still intend to cut rates before the end of this year, assuming economic growth continues. We believe that our policy rate is likely at its peak for this type of cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year, according to Powell. And he said he reiterated his confidence in the Fed's target inflation rate of 2%. He pretty much says that every single meeting, right? And no decision yet on the balance sheet reduction, according to Powell. Fed Jerome Powell said the central bank has not yet come to a decision on how to change the pace of its balance sheet reduction, but he noted that an adjustment isn't far off. The general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we've previously issued. Coming up a little bit more here. Let's see here, guys. Yada, yada, yada. Investors are relieved to see 3 cuts stay in the dot plot, of course. And that's the main thing you guys have to realize, right? We can dive deeper into the dot plots, into the reports, do a bunch of deep diving, but you have to realize the overarching reason here why markets are running. It's because, again, Powell has provided them with reassurance that we're going to get 3 cuts as of now, right? Let me see what else. Anything else here that is important? Powell needs a good reason not to cut rates, says Principal Asset Management's Seema Shah, which we're not going to get into that. Higher inflationary data hasn't changed its overall trend downward, Powell says. More inflationary data points, the consumer CPI and personal consumption expenditure rose for both February and January. I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. He said during a press conference, we're not going to overreact to these 2 months of data, nor are we going to ignore them, which is good. Those comments are worth considering there. And we can see here, strong hiring would not push Fed to delay rate cuts, according to Powell. He said strong hiring in and of itself would not be a reason to hold off on rate cuts. He said, adding that the job market by itself is not cause for concern around inflation. Earlier, Powell said an unexpected weakening in the labor market could also warrant a policy response. So what do you guys think? Let me know your thoughts in the comments. That's a quick little breakdown there. And again, the overall thing here is we're still most likely going to get 3 cuts this year. Although we could, of course, see less, more. Things are always subject to change, as always. But as of now, that's causing stocks to move. We're pushing all-time highs, like I said, guys. And, yeah, well, at least SPY is. SPY's at all-time highs. The NASDAQ's not. Let me actually pull up triple Q here. This is a couple bucks off the all-time highs. Yeah, about $5. But, yeah, we're breaking out of the wedge on triple Q, which is great. The Russell starting to go back to 2080. It looks like that's pushing past the highs from the end of last year, which is nice. The Dow's up to now 39.5, all-time high on the Dow Jones as well. Can't forget or can't not mention that in this video, guys. Shout out to the Dow, 500 points away now from that 40,000 point milestone, which is going to be just insane for the Dow. So we're at 39.5 on the Dow. We're up 7,000 points on the Dow, guys, in the past 140 days. So roughly, how many months is that? Like 5, whatever that is. 21% move for the Dow. So what do you guys think about the Fed, the markets? Are we going for more all-time highs? Are we peaking out here? Are you invested? What stocks are you buying? Let me know in the comments. Hit the like button. Feel free to subscribe. And don't forget to get up to 15 stocks for Moomoo, each up to $2,000, guys. Just use that link down below or go to stocksurfest.com/Moomoo. Open up your account and fund it with at least $100. You get 5 stocks, and fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to $2,000. And you could also use the QR code right here, guys, or again, the link down below. So get your stocks. And with that being said, cheers. I'll catch you all in the next one.